Hello and welcome to this video. In this video, we will analyze the Adobe stock, which trades under the ticker symbol ADBE. First, we will provide an overview and look at the current news, where I will cover my motivation for covering this stock. After that, we will look at Adobe stock from a value investment centric perspective. In the end, we will look at the current price and other key factors to determine whether it is the right time to buy Adobe stock or not. So according to Wikipedia, Adobe Inc. is an American multinational computer software company incorporated in Delaware and headquartered in San Jose, California. Its value proposition is centered on specialized software for the creation and publication of a wide spectrum of content, including graphics, photography, illustration, animation, multimedia, video, motion pictures, and print. Its flagship products include Photoshop, image editing software, Adobe Illustrator vector-based illustration software, Adobe Acrobat Reader, and the portable document format PDF. It also provides tools for audiovisual content creation, editing, and publishing. So the Q3 earnings of Adobe have broken estimates. So Adobe reported third quarter fiscal 2021 non-GAAP earnings of $3.11 per share, beating the Zacks consensus estimate by 3.7%. Further, the figure improved 21% on a year-over-year basis and 2.6% sequentially. The total revenues were $3.94 billion, which surpassed the Zacks consensus estimate of $3.89 billion. Further, the figure was up 22% from the year-ago quarter and 2.6% from the previous quarter. Furthermore, Adobe reported revenues under three categories: subscription, product, and service and support. Subscription revenues were $3.7 billion, accounting for 93% of its total revenues, up 24.1% on a year-over-year basis. Product revenues totaled $119 million, which was 3% of revenues, which is up 9.2% year over year. Services and support revenues were $159 million, which are 4% of the total revenues, declining 5.3% from the prior year quarter. And also on TipRanks, it got a strong buy rating from analysts. So based on 20 Wall Street analysts offering 12-month price targets for Adobe in the last 3 months, the average price target is $721.83 with a high forecast of $770 and a low forecast of $670. The average price target represents a 15.29% change from the last price of $626.08. Therefore, I decided to cover the Adobe stock so that we can look at the Adobe stock from a long-term value investment centric perspective without getting caught in the hype, and also take into account the performance of Adobe as a company during the past years. I believe that it is always better to do our own research so that we don't end up paying more for the value that we are getting while investing. If you watch this video till the end, you will understand my whole thought process which I use to shortlist stocks from a value centric perspective as an experienced investor. So the results of framework are currently based on 14 dimensions, which show excellent correlation between what the world's most renowned investors think about the stocks that we analyze. For example, you can see my video on Alibaba to see what I'm talking about. I will provide a link to that video at the end of this video. Now let's analyze the Adobe stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment. I will also be interested to see how much score we get out of 100 for the Adobe stock. So as always, I will be interested to see if we can get a score of over 75% over the time frames of 3, 5 or 10 years, and see the parallel or correlation between our feasibility analysis and the opinions of analysts. In other words, I will be interested in seeing how well our dimensions converge to the same conclusion as the analysts who have given it a strong buy rating on TipRanks. Later, if our dimensional analysis validates its feasibility as a good investment, we will look at the current state of the market through the lens of 6 critical dimensions to gauge if it is the right time to accumulate Adobe stock, or shall we wait for the market to offer it to us for a cheaper price. So let's go ahead and first analyze the Adobe stock via the 14 dimensions of value-centric investment feasibility. So looking at some key numbers, the current price of Adobe stock is $623. The market cap is $298 billion. The PE ratio over the trailing 12 months is 53.5. The PEG ratio over the trailing 12 months is 2.4. The earnings per share over the trailing 12 months is 10.83 US dollars. The current price to book ratio is 21.5. The current price to sales ratio is 20.7, and the current price to free cash flow ratio is 43.2. And over the past 5 years, the average revenue growth has been 22%, the average asset growth has been 16%, the average equity growth has been 14%, the average net income growth has been 55%, while the average liability growth has been 20%. So now let's have a look at the total revenue. So what I am interested in is whether the total revenue has been increasing or not during the past 10 years. So we can see that during the past 10 years, it has increased from 4 billion to 13 billions. And the net income increased from 775 million US dollars to 5 billion US dollars during the past 10 years. The maximum revenue was achieved in the year 2020, where it was 13 billion US dollars, and the minimum revenue was in 2010, where it was just 4 billion US dollars. At the same time, the maximum net income was achieved in 2020, which was 5 billion US dollars, and the minimum net income was achieved in 2014, which was 268 million US dollars. So during the past 10 years, we can see more or less a steady increase in revenue and also more or less a steady increase in the net income. And as we can see over here, the average revenue growth was 13% during the last 10 years. The average revenue growth was 22% during the last 5 years. And the average revenue growth was 21% during the last 3 years, which is incredible. And the increase in free cash flow is also very important. So in 2010, the free cash flow was 976 million US dollars, while in 2020, the free cash flow was 5 billion US dollars. So free cash flow is important because it is the leftover money which is used for acquisitions and innovations, etc. And this is the graph which is very important. So what this graph tells us is that if we take the free cash flow over the past 5 years and divide it by the long-term liabilities, the free cash flow must be able to pay for all the long-term liabilities. So we have to see whether the graph is over 1 or not. So I'm interested in seeing whether the graph remains over 1 or not. Since 2014, the graph has always remained over 1, which is excellent. Of course, we can have another version of the graph where we can have the cash flow of the past 3 years and divided by long-term liabilities. So the basic idea over here is that are we able to pay the long-term liabilities if we accumulate the free cash flow over the past years? Over here, I have chosen a time frame of 5 years, but of course, you can look at 3 years and 10 years also if you desire. Feel free to pause the video if you want to have a look at the maximum and minimum free cash flows and the year where it was achieved, and also the maximum and minimum long-term liabilities and the years where they were recorded. So this graph shows me whether Adobe will be able to pay its long-term liabilities with the cash flow from the last 5 years or not. And looking at the diluted shares outstanding, we can see that over the past 10 years, they have decreased significantly. So in 2010, the diluted shares outstanding were 526 million, while in 2020, the diluted shares outstanding were reduced to 485 million. And over here you can see the percentage decrease or increase in the diluted shares outstanding over the past 10 years. Feel free to pause the video to have a deeper look. And now we will have a look at the ROIC and ROE over the past 10 years, the past 5 years, and the past 3 years. So in the past 10 years, the maximum ROE was recorded in 2020, which was 44%. The minimum ROE which was recorded was 4%, which was in 2014. The average ROE has been 18% during the past 10 years. And as far as the ROIC is concerned, the maximum ROIC was recorded in 2020, which was 32%. The minimum ROIC was recorded in 2014, which was 3%, and the average ROE has been 14%. Feel free to look at these important statistics for the last 5 years and the last 3 years. And the graph of total assets over total liabilities and total current assets over total current liabilities is also important, and we can see that in the last 10 years, most of the times both these graphs have remained over 1, which is a very positive sign. And now let's have a look at the overall score of the 14 value-centric dimensions over the last 10 years, the last 5 years, and the last 3 years. These scores show the feasibility of the stock as a long-term value investment over different time frames. Feel free to pause the video if you want to look at each one of these dimensions and the results of them in a certain time frame. So over the last 10 years, we get an average score of 79%. Over the past 5 years, we get an average score of 93%. And over the past 3 years, we get an average score of 86% respectively, which is brilliant in an industry which is evolving very fast. So we conclude that the result of our dimensional analysis agree with the majority of analysts, and we believe that Adobe stock is a great value investment. Now, of course, the fundamentals are excellent, but before we purchase the Adobe stock, we need to answer the question, is it the right time to buy Adobe stock, or shall we wait despite its outstanding fundamentals? So before I press the trigger, I look at the state of the market and see the price, sentiment, and hedge fund activity to see if it is the right time to buy or shall we wait. In other words, we look at the 6 dimensions of market state before making a final purchasing decision. So let's go ahead and investigate. So first of all, looking at the PE ratio range. So in 2019, the PE ratio range was between 55.2 and 35.95. In 2020, the PE ratio range was between 49.2 and 26.27. And in 2021, so far, since we still have some months to go in this year, the PE ratio range has been between 59.36 and 37.51 US dollars. So we can see that the PE ratio range has been quite high during the past 3 years. And when I buy the stocks for my portfolio, I only focus on stocks which have a PE ratio of less than 20 currently. Hence, the Adobe stock is not on discount currently, and therefore this dimension is a fail. And as far as the analyst rating is concerned, it is a strong buy as we explained in the beginning of the video. So out of 20 ratings, 17 are a buy and 3 are a hold. So this dimension is a pass. And looking at the price charts, from 2016 onwards, the price has just been increasing, and now the price is not that below from the all-time high of 665.99 US dollars. Therefore, I will wait for a correction and I will not buy the stock at such a high price. So when the price will drop, the PE ratio will decrease, and then I think it will be a right time to buy at those prices where the PE ratio is below 20. And now let's have a look at the hedge fund activity. So let's see what the smart money thinks. Are the hedge funds accumulating? So as we can see, the smart money or hedge fund managers agree with me, and they are gradually decreasing their holdings since June 30, 2019. As they say, when the market is greedy, we need to be fearful and sell. Now looking at the insider trading, we can only see the number of transactions over here and not the actual number of shares that were bought or sold. So we can see that the buy transactions are slightly more than the sell transactions during the past 12 months cumulatively, but keeping the rating absolutely unbiased, we can say that okay, this dimension is a pass, and we can assume that the actual number of shares sold by the insiders were slightly less than the shares that were bought by insiders during the past 12 months. Therefore, we get a low overall score of just 33% for the 6 dimensions of market state. Therefore, the score of the current market state suggests that we might have to wait a little bit for the time to buy. Of course, it is a leader in its industry with a strong history and great fundamentals, but I just have to wait to get the PE ratio under 20. I hope that market will present me with such an opportunity soon. There are many other companies and options on the market currently that will provide a good value for the money that we will pay for their stock currently. This is our job to look for them and analyze them before investing. Please let me know in the comments below, did you like this analysis of Adobe stock or not? I hope that you liked the content of this video. If you would like to see such videos with an unbiased opinion and my own unique style of analyzing stocks, please drop a like, subscribe to my channel, and I will see you in the next video. Bye.